Hey guys, Freaky Finance here. Today we're going to look at AirBNB. Last week we did Pinterest. This video is going to be AirBNB. Actually, I'm going to do two videos back to back, AirBNB and Crocs. But this one's going to be AirBNB, and you're going to notice that I'm going to show you both positions because I'm literally filming them back to back. So AirBNB is an interesting one. We talked about it on the channel quite a bit. Like last video, I'm going to try to do a little summary at the very start because I know a lot of viewers don't actually make it through the whole video. And I'm going to try to talk quicker as well. But the main crux here, again, is share-based comp up 26% year over year. And basically, share-based comp for the last 2 years, really since it IPO'd, has been hiding the scale that's in this model. And we're going to see a decel in terms of the growth rate in share-based comp, which should start showing scale in the line items of the expenses. And we'll walk through this on the annuals because I just wrote them out. So we should see this, the head count, or sorry, the share-based comp, instead of going 26% year over year, which is huge, revenue only grew like 12, you're going to see it's decel back to headcount growth. So whatever headcount growth is going to be, whether that's 10% or 15%, it's going to decel, or maybe 3% like Uber. I saw Ackman's note on it. I thought that was interesting. But again, this is similar to that idea. I think we're just going to start seeing scale over time. Now, they mentioned something on the call, which kind of makes me feel like, oh, okay, I got to wait longer now. But we're going to talk about that as well. But that's kind of the crux of why I'm excited about AirBNB, is that the scale that's in the model has been hidden since the IPO. And if you were to try to take it out, which eventually it's going to start slowing down anyway. We saw that with Uber. We saw that with Pinterest. Or we're starting to see that with Pinterest. We'll see. AirBNB is a little bit farther along than Pinterest is in terms of that scale game, and it shows up clearer over time. In terms of the growth rate, we're actually still buying AirBNB at a slower growth rate, which is nice. Usually you don't want to buy these guys when they're growing at really high, usually because the multiple is very high. So you're trying to find a growth rate that's likely to be achieved in the long run, if not accelerate. So we did see Q4 accelerate the market like that. But we're not, for quarter, we don't really care. This is like a long-term thing that I'm very excited about. Anyway, ADRs were only up 1% year over year. We know hotels took on average 3 to 4% price. So Airbnb's, again, showing up here. I think a part of this, the weak growth in ADRs, is because they've been pushing so hard to, like, they had different products. So basically, instead of renting out a whole home, you could rent out a room in a home with the host still there, right? And that's cheaper. All of a sudden, it's $50 a night, right? So that brings down ADR, but increases the booking size. So we're seeing that impact, I think, as well. And people set the price, right? Whereas hotels will set the price. And if hotels can set any price they want, especially the nice fancy ones, right? The 200, 300, 400, 500 a night. So it's just interesting to bring that up because there's an economy going on here. Hotels keep taking more price than Airbnb is. So Airbnb is technically getting cheaper in terms of the end user experience. So that's something to think about in the long run as well. And Airbnb kind of just rides on it. Just think of like a transactional business, like a Visa that just ride on the inflation, what's currently happening in the world. So that's worth bringing out. And then this was also, you're going to see this when we jump to the numbers, which I'm about to show, is the service fee. So basically shooting down or shooting up because of FX. So going up 100 bips year over year, so 1%, which is 20% of their GBV. So that's worth bringing up. You're going to see that, and the margins actually grow in terms of GMD, but still don't really show up in the product and development line and sales and marketing. We're going to jump in that in 2 seconds, and then here's the Latitude share count finally going down, and this is with the RSUs being what they are, very high share-based comp. So we're actually going to see the buybacks have more of an impact, assuming the share price stays relatively cheap, as the share-based comp slows down. So you're going to see the scales show up, and you're also going to see the buyback show up more. So that's exciting. So anyway, let's jump into it. So this is just the annuals since COVID. I guess I should show my position. So this is my biggest position. I own it in Canadian dollars, I own it in American dollars, and I own it in my old account as well still. I also have Crocs highlighted here because it's the next video that we're going to talk about was another win. Kind of freaking me out when we have 3 big winners all in a row. It also freaks me out when I have so much green. usually it's not all green all the time, right? So anyway, it was a good week when everything's popping 15, 20%. My Crocs and Airbnb, especially after Pinterest move up last week. Anyway, let's jump into it. Here's the scale. So I start Airbnb with the gross booking value just to see how much is running through the platform. So there's still only $81 billion running through Airbnb right now, which is low for the total hotel industry, considering how much we think about Airbnb. It's still very low relative to hotels around the world. It could take a lot of share here, and that's one of the bull cases. The growth rate did slow. You see that here in the GMV growth rate, only up 11.7% year over year. So we're still decelerating. I think that's one of the reasons why the share price is only up. Like we're only up 40% or so on average. This thing, in the longer term, I think is going to be very exciting. Now it's going to react too much to either growth accelerations or growth slowdowns. So as the quarter comes in good, like this quarter did, it picked up and shot up 20%, right? The reverse can happen when we've seen it, when it slows down and it shoots down 20%. It's kind of like this stock, right? It's very volatile. Anyway, the revenue's gone from 3.3 billion to 11 billion, right? 5 years. It's pretty nice. The thing here, though, and this is what's very special, is the gross margin dollars. So imagine just growing like 1.2 billion and only having to spend 175 million to get it, right? That's what happened. Now we know part of that margin expansion, you can see that here going from say 82.8 to 83.0. That is because of the FX fee. So they are starting to make more money on that as well, which is also helping. And we have seen scale and operating support line over time. So you can see, used to be 25, that was during COVID, so it's misleading because it's so high there. But you can see even in a normalized period or more normalized, 14%, 12%, 11%, 11.5%. So you're seeing clear scale and operating support line. And that's with ridiculous share-based comp still from the IPO. So you're seeing material improvement here, and then you're seeing where we're not seeing it, which is here in product development and sales and marketing. So these two still have heavy, this is actually the last year of super high share-based comp growth, right? Higher than revenue growth. And you can see that here in this line. So share-based comp as a percent of revenue just gone from 15, 11, and then all of a sudden it shoots back up to 12.6. So that's where these negatives are coming from. It's coming from share-based comp. Now we should see that slow down. They said it will slow down, but they're also doing some other initiatives this year that we're going to talk about, which could, again, keep hiding the scale that's there. Or, I mean, you can clearly see it's here. It's just not as obvious as I think the market should expect in the long run for Airbnb. Anyway, G&A is obviously a source of scale, 13% to 10%. There's noise here in this number. What else is there worth bringing up? Yeah, I guess we could flag the noise. It was 991 million this year. You can see it basically double to business and operational taxes. But basically what happened there is it shot up G&A and gave them it back on the tax part. So kind of just a noisy thing there worth bringing up. Balance sheet, you can see the net interest income just chugging along. Like when you see a balance sheet like this, it's special. Again, the tech bros, this is the balance sheet. A lot of these growers from Silicon Valley are amazing, right? The founders refused debt, and you could see it here. Just got 10 billion in cash and cash equivalents, right? You have only 2 billion in traditional debt, so you're net $8-9 billion at any given point in time. And you also have the deposits from the actual people planning to book the trips on Airbnb. So that's not part of the CCE, but that's just worth bringing up. CCE is largely from the IPO. They've been just letting the cash pool slowly grow, but they have been starting to buy back shares, which we saw. And that shows up here, right? So you're going from a dilution period for the last 3 of the last 5 years, and then you're going into the buyback showing up. And this is overcoming the dilution from share-based comp. So, and I expect this to actually accelerate, depending where the share price is and how much they use of this $10 billion war chest to buy themselves back more, right? Free cash flow wise, I mean, we're still at 4. You can see it go from negative to 2 billion to 3.4 to 3.7 to 4.4, right? And the capex, just like Pinterest, super special, right? Just generated 4.5 billion, only having to put 75 million back in. That's very capex light. So a lot of the free cash flows are CFOs becoming free cash flow, and a lot of that is being going to share buybacks. So anyway, I love that setup in the long run. It's really nice, especially when these companies finally get cheaper, like they do occasionally. After a weak quarter slowdown, you can just wait and buy them, right? That's just what we do, and it's starting to work pretty good over the last years. This is me just flagging a share-based comp again in different ways, and here you can see it going from 930 million to 1.1 billion to 1.4 billion. Again, these numbers aren't small. On a revenue that's only 11 billion, right? Just imagine you're spending 1.4 billion in share-based comp and your total revenue is only 11 billion, right? So we're going to see this growth rate decel. Well, we should still, the business still chug along. So we should see margin expansion, or more than we have. But again, they're doing some initiatives that we're going to have to talk about. What's this tab? Oh, this is the first quarter, and I just saw that it was unique. But if you need to, you can freeze frame that. That was when I think we first did the video. This thing was like, I think it was hitting around like $90 or something. Anyway, this is worth bringing up, just like what they're guiding to. They're planning to invest 200 to 250 million towards launching and scaling new businesses to be introduced later this year. They've been teasing this for a while, and I think this is going to give hope. Maybe it'll give an opportunity. Usually the market doesn't like new things. Like when Amazon actually made their push into other things that it wasn't special in, the market actually didn't like it, right? There's headlines like, oh, Bezos is going into this now, and no one believed in him, right? So I thought it was funny that he kept bringing up Amazon, and how we'll talk about that on the transcript as well. And we saw that with Facebook as well, with Zuckerberg. Like we had like the PC Facebook fine on a desktop, and they were like, oh, he's not going to be able to do it on mobile, and then he did it, right? So anytime there's a new thing, we'll see if we get an opportunity. I've seen it before where it has. I also seen it when the market really liked it, and then I never got that opportunity. So we'll see. Usually it's a source of volatility where I can get deals, but I'm always looking, especially for this company, because it just keeps putting out what I want to see and doing what I want them to do. So anyway, that's worth bringing up here. They're not basically saying we're not going to see margin expansion, which is interesting when you should see share-based comp go down, decel. So basically they're saying the money that we're going to spend in these new initiatives are going to offset the share-based comp decel. So we're going to keep hiding the scale for a bit until we push out these new business initiatives. And they say it'll be most pronounced during the first 9 months. So basically it's setting up Q4 of 25 to be good, but the next 3 months or 3 quarters are still going to be kind of hidden in the scale that I think is there. I mean, you can still see it there in the numbers, like when we went through the 5 years, you can see it. It's just not as obvious as I think people expect in the long run. This is just a long-term track record of Airbnb. Again, when we did a couple videos, I remember down here in like the 110s, the 120s, 160. It's fine. I mean, it's underperformed our Expedia position, which is funny. The Expedia was dirt cheap, right? It was like 6 times EBITDA. Anyway, here you can see kind of what they're saying in terms of what they're doing. So they're still optimizing the product, merchandising and payments, which is putting up some near-term results, new tech stack, but helping tools like hosts and stuff like that, and making the service more reliable, and removing the bad hosts, really. And again, they keep hinting a lot of previous calls how we're preparing to move beyond our core business. So you're going to see headlines on them failing, you're going to see headlines on them succeeding, and I'm hoping that leads to some good entries, especially when they don't see the results from these investments right away. Or maybe they do, but usually they don't, and usually it gives you an opportunity. But anyway, this is kind of when he talks about Amazon, Airbnb, right? How they went from books to adjacent to DVDs. We're going to do the adjacent to travel thing. Adjacent to travel thing, said it twice there. And really he's trying to get more frequency. So he wants people to use the app more when they're booking a trip. So things that you could think of are, in my mind, are experiences when, say, you book a trip. Now Airbnb knows you booked a trip. What they might do is start sending you things or showing you things like these are things you could do on the trip. So it's more aggressive experiences. It could be travel insurance for your trip. I'm trying to just spin here, like things that you would buy, like say like that you buy through Expedia. The same idea, like, hey, if we're gonna the host, why don't we link it to other things that the traveler would want, which could benefit either the host, maybe the host also has experiences that they can link to their offering, like their home, that are around them. Maybe they do it on their side, or maybe Airbnb tries to do it based on what they know is in the area that other people have done that's in the area that's popular for that specific person, right? I feel like kind of like Pinterest and how personalization is going to just only improve with AI. I think Airbnb has to be the best travel app for AI-induced personalization quarterbacking. Like, they just have to be able to do it. So we'll see what they do with it. Again, this is all new, so again, it'll be all margin accretive after initial investment, right? And usually investors don't like to be the initial investors. So we'll see. Here, again, this is just a crazy stat. So I talked about this last call too, but 70% of their gross booking values just in 5 countries: US, UK, Canada, France, and Australia. So they're severely underpenetrated around the world, like crazy underpenetrated. And so I just think it's they have still a lot of growth to go. And if inflation accelerates, then you're going to see their ADRs go up because people will raise the prices that they're willing to rent their homes at. That's just the way of the world. It will just ride inflation like it always has. So it's a nice inflation rider if you're worried about that as well. And over time, that's one of the reasons why you're going to see scale no matter what. Even if they were bad at managing costs, you're going to see them for the long run. Here is this a New York example again. And this is worth bringing up because I keep seeing this on Twitter. I see it on headlines from news. And they view it like Airbnb is the bad guy. And it's distorting things. And then what happens, like New York's a pretty big city, what happens actually? So, and a lot of people don't understand markets and let alone housing supply demand, but it's just like that. So if there's less places available to rent, the prices go up. And if there's more places available to rent, the prices go down. So if you ban Airbnb, hotels are going to raise their price because there's less competition. There's less supply in the market. And that's what happened in New York, right? So we saw Airbnb was only up 1% for the entire year in terms of ADR, 2% if you add back the FX headwind. But you can see in New York, rents are up 3% year over year. They're actually up 7% year over year for hotel prices in New York, right? So if you ban Airbnb, hotel takes price. That's just what happens. This is them saying like what they worked on. So they worked a lot on reliability, trying to get the bad actors out of Airbnb, like the weaker hosts. They're trying to basically not make them more hotel-like, but make them more reliable. So people, if they travel, so they don't have to frantically try to get a hold of the host and actually get into the house kind of thing. Make it more seamless and frictionless for everyone. And then this paragraph, I think, is the most insightful one in terms of what they're likely to do next, in terms of what travel adjacent means. So basically, they're saying our current learnings in terms of experiences, like you might say, freaky, they already have experiences, versus what they historically put in the market in the coming months, is that one of the insights here is the classic traveler does not come to our site or any other site to book the entire trip. And that's true. Usually you do book the airline and the hotel, right? And then you kind of wait a bit, and then you'll kind of get, as the date gets closer, you'll start filling out your itinerary of things you want to do. And that's true for a lot of people. And the reason why she brings it up, I think, is very important, because that's what they're going to try to tackle. Okay, we know that you are going here on XYZ day. How can we sell you more things? Or how can we help you with your trip, really? But sell you more things from an investor point of view. From a product point of view, is how to help them during their travel, right? To have the best experience they can. So this will be interesting to see. Like, what does that mean? Does that mean shared experiences? Does that mean other traditional things like travel insurance, or just more experiences around the area, right? Since they know where you're traveling to, right? And more personalized that way. Like maybe they send you a notification, hey, your trip's in 2 weeks. These are things that other people are doing in the area. Who knows, right? Or things you may be interested. Who knows? Who knows what they do? But I just think this is going to get superior, especially with artificial intelligence and personalized matching. So it's something to think about. We'll see how the market treats it. Usually uncertainty can lead to opportunity, but we've seen other times when people just buy into the uncertainty if it's a good idea, right? That market doesn't think it's coming. So, or it could think it's a bad idea when they hear it, right? Anyway, I think longer term is very exciting. It's something natural that should happen. And obviously they're trying to be very careful about risk to the core offering. So I just thought it was worth bringing out. Again, they're trying to get frequency. So that means instead of going to the app once or twice a year, book your trip and go, they're going to try to get you on the app more often to do more things with it. So it tells you where the head's at. So frequency and travel adjacent. Thought that was worth bringing up here. Kind of gives a little clues of what's going to be happening in the next 9 months. Again, it's going to hide the scale. Negative impact on margin from these investments will be heavily weighted in Q1 through Q3, right? So, well, my share-based comp finally stops being bad. It's still going to be hidden because they're investing in these things right after the share-based comp decels. So, anyway, from my point of view, it's kind of frustrating because I was hoping 2025 would be like an easy comp set up against 24, right? That literally I just have continued revenue growth and share-based comp decel. It was very clever. But now I have these initiatives that I got to think about, and they're basically guiding that. They're not going to see margin expansion because they're investing in these new initiatives, which, to be fair, they do have to push out and market if they want them to be successful. The other hair on Airbnb is that the 3 insiders just sell. more than 3 insiders. The 3 founders just sell. They sell all the time. Doesn't matter what the price is. They sell. So they're still in the liquidity exit phase. And I think that's also keeping a lid on the price, right? So the scale is hidden and all the insiders are just selling. So Chesky, if this is such a great idea, why are you always selling, right? So that's good because it keeps the price cheaper than what I think I would get if they weren't always selling. And here's them just selling all the time, right? So the three founders. I think Chevy Joseph's the one who sells the most frequently, though Chesky's up there as well. So I just thought that was worth bringing up. It's an interesting business, my favorite business in the long run. I love listening to the quarter, what they're doing with it. I do think the initiatives they're going to make are going to be great, but we don't know how the market's going to treat it when they first come out. And then maybe they don't look so great in a quarter, right? It's like, oh, what are you spending money on? We're not seeing any return. The thing's crap, right? Who knows? It could be a lot of things. We've seen it before. I've seen it before in founding run companies, and usually it can lead to opportunity. But sometimes on the other hand, sometimes the market really likes it, just shoots it up, right? And then I'll never get the opportunity to buy it cheap again. I'm looking 5 years out, 10 years out. Like the scale there is just special, and its position is just special. Anyway, I'd like to know your thoughts on Airbnb. I'm gonna turn this one off and do the Crocs video next. Totally different beast. And yeah, have a great long weekend.